A drop in global inflation to a 4-year low is making waves in the markets. The big question is, does this signal a real recovery? Or could it just be a brief pause before more turbulence?
Today is May 16th, 2025. The latest numbers show global inflation at its lowest point since 2021. In the US, inflation for April has fallen to 2.3%. That's down a bit from March, which was 2.4%, and it's even below what most expected. Before we dive deeper, does this feel like a turning point after all the price pressures we've seen?
It's definitely a notable shift, but it's not the whole story. The U.S. hitting 2.3% inflation does come with some big changes. For instance, energy costs are down 3.7% compared to last year, and gasoline prices have fallen nearly 12%. That's immediate relief for both consumers and businesses. But
Not everything is cooling, right? I saw shelter costs are still high.
exactly, shelter costs are up 4%, and they actually make up more than half of the monthly rise in the Consumer Price Index. So the relief isn't across the board. It's really concentrated in some sectors more than others.
And that's where it gets complicated. Like, look at the Eurozone. There's a lot of variation. The Netherlands is at 4.1% inflation. France is way down at 0.9%. But some places like Croatia and Estonia are closer to 4.5%. Why do you think there's such a range across Europe?
A lot of it comes down to how each country's economy is recovering and their exposure to things like energy prices or supply chain challenges. Some countries are really benefiting from lower energy prices, while others are still feeling the impact. The IMF's latest report projects that global inflation will keep dropping, but the pace will be different from country to country.
Let's talk about what's actually driving these numbers down. Falling gas and oil prices seem to be playing a big part. Energy is such a major input for both households and businesses, but wage growth is also slowing, especially in the Eurozone. Wages were up 4.1% year over year in December, but the European Central Bank expects that to slow to just 1.6% by year's end. Does that mean the risk of a wage price spiral is fading?
It might be too soon to say it's gone completely, but the trend is definitely moving in the right direction. When there's less wage pressure, it takes away one of the drivers of persistent inflation. There's another major development too, a new trade deal between the U.S. and China. The U.S. is now cutting most tariffs on Chinese goods from 145% down to 30%, and China's dropping tariffs on U.S. imports from 125% to 10%. Just a month ago, tariffs were at historic highs, like 54% on some Chinese products. So this is a big shift.
That's a huge change. Some analysts, BlackRock for instance, warn that high tariffs could trigger stagflation or even a global recession. Now that tariffs are coming down, is the risk of stagflation basically off the table?
The risk is definitely lower now. With tariffs dropping, input costs are falling, and that helps keep inflation under control while supporting growth. The IMF is still cautious, though. They see some risks ahead. But compared to just a few months ago, the outlook is much improved.
So, for people in the US, this means their money can go a bit further. Lower inflation, especially for basics like energy and food, means higher real income. That could boost consumer spending, which in turn helps the economy grow. But central banks are keeping a close watch. If inflation stays close to target, do you think we might see rate cuts sooner than expected?
It's a real possibility now. With inflation so close to what central banks are aiming for, they have more flexibility. They could cut rates or at least stop raising them for a while. That gives them some room to support the recovery without risking new inflation.
Looking ahead, it seems like the combination of lower inflation and reduced trade tensions could set up a more stable global recovery. But with the Eurozone numbers still uneven and some risks out there, Is it too early to say we're in the clear?
We're not there yet. There are still some big differences between regions and the potential for market volatility. But overall, the momentum is positive. The next few months will be critical to see if these trends really stick.
That wraps up today's episode. Inflation is down, trade tensions are easing, and recovery looks more likely. But there's more to watch.
Thanks for joining us. We'll keep tracking the data, policy shifts, and what they mean for the recovery.